Hi friends, welcome to Lova's Commerce Academy. Today I am going to tell you about definition of accounting. So, by understanding the definition of accounting, one can understand what is the entire process of accounting, as well as what an accountant will do can be understood by this definition. So, without wasting much time, let's enter into the topic, that is definition of accounting. So, if you observe that the definition of accounting The definition of accounting. Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character and interpreting the results thereof. Friends, it is very important that recording what? What should we record here? We should record transactions and events. What should we record? We should record the transactions and events. What transactions and events can be recorded? Only some type of transactions and events can be recorded, which can be expressed in terms of money, or at least which are in financial character. These transactions only can be recorded in books of accounts. Okay, for this what we have to do? So before doing recording, we should identify. What we have to do? We have to do identifying. So we should identify the transactions and events. What transactions and events we should identify? Those transactions which can be expressed in terms of money, as well as which transaction can be expressed or can have a financial character at least. So to understand better, I am going to give you an example. Friends, let's assume Mr. Anil is there, and who is doing a business, for suppose a stationery business. So for his business he contributed rupees 5 lakh, out of which he purchased raw material of raw material worth of rupees 2 lakhs, and he is paying rent. He is paying what? He is paying rent of rupees 5,000, and he was appointed an accountant named Raju by paying him a salary of rupees 25,000 per month, as well as he sold goods worth of rupees 3,50,000, as well as after all he found that he has a stock of rupees 30,000 in his hand. Okay, so these are the transactions performed by an entrepreneur called Anil, the proprietor called Anil. So he is doing a stationery business now. Yes, out of all these transactions and events, here let me give you some clarification between what is the transaction and what is an event. Okay, transaction is nothing but performance of an activity. Transaction is nothing but what? Performance of an activity. Event is nothing but the resultant of an activity or a transaction. Is it clear? So Let me give you an example out of the example of a stationery business by Anil. So purchase of raw material is a transaction. Paying rent is a transaction. Appointment of an accountant named Raju is a transaction or an activity, as well as selling goods is a transaction, as well as stock in hand, it is an event. It is an event. Okay, my dear friends. So by doing all these transactions, he found that a stock is in hand, that is 30,000. It is the result. As well as after, what is the sale he done? That is 3,50,000. What are the expenses he met? 2 lakh for purchasing raw material, 5,000 for paying rent, 25,000 for salary. So what is the total? 2,30,000. So 2,30,000 is the expense he did. We should deduct it from the sales remuneration. Sales revenue, sorry, sales. So that is, what is the remaining? 1,20,000. So 1,20,000 is what? It is a surplus. So what is the surplus he have in hand? That is 1,20,000 is the surplus. So it is also, the surplus is also what? It is also an event. It is also an event. Did you understand? Yes. So here there are some transactions as well as there are some events. So stock in hand is also an event. Surplus is also an event. It is the result by performing the transactions. I think it is clear for you. Okay, my dear friends. So now what we have to do? We have to identify what is the primary concern here. So identifying the transactions, financial transactions, identification is very important here. So appointing an accountant is what? Is it a financial transaction? No, it cannot be a financial transaction, because the appointment of an accountant cannot be expressed in terms of money, but the payment of salary done, the payment of salary to the accountant can be expressed in terms of money. Then it is a financial transaction, but appointing is not an financial transaction. It is an activity of non-financial nature. So the appointment cannot be recorded in the books, cannot be identified as a financial transaction, but the remaining will be identified as a financial transactions, and which can be expressed in terms of money, and those should be recorded in the books of accounting. So the recording should be in a beautiful way, which can be an art. That is, we should record all these transactions in a book called journal. In a book called journal. Journal is also called as book of original entry. Journal is also called as what? Book of original entry, or book of primary entry. Book of primary entry. So recording should be done in a good manner. When we can say that it is in a good manner, we should follow the order. That is what? Chronological order. What should we follow? We should follow the chronological order. Chronological order is nothing but what? Date wise. So by taking the supporting documents like vouchers, payslips, and etc., we should put it in order, that is in a chronological order, and we should record those transactions and events in the journal, that is, which is called a book of original. That is about recording. As well as after recording, we should do another process, that is what? Classifying. So what we have to do? We have to classify the transactions and events which we recorded in the book of original entry or in the journal. So after recording in the journal, we should post them. What we have to do? We should post them. We should post those entries into ledger. What we have to do? We should post them into ledgers. So ledgers. So classification, the process of classification can be taken place in what? In ledgers. So ledger is also called as book of what? Secondary entry. What it is? Book of secondary entry. So why we should classify? Why we should classify? This is the question which we have to answer. So why should we classify? We should classify the entries recorded in journal to separate them. For example, all the transactions relating to Raju can be recorded at, or can be posted in Raju's ledger account. Raju's what? Ledger account. All the transactions and events relating to purchases should be recorded in, should be posted in one ledger, that is purchase ledger. All the transactions of cash should be posted in cash ledger. So for easy information, for easy understanding, for easy reference, we should classify those entries recorded in the journal to ledgers. Okay, my dear. So I think you get clarity about classification. So after classification is done, the next process we have to do is summarizing. What it is? Summarizing is nothing but knowing what happened and why it is happened. It is very important. If you take the stationery business as an example, which we discussed earlier, so Mr. Anil performed so many transactions. After performing these transactions, he wants to know either he get profit or loss. It is profitable or not, isn't it? So it is very important for every businessman to know what happened and why it is happened. So to know that, we should do the summarizing process. In summarizing process, what we will do? We will prepare. What we will do? We will prepare. We means here the accountant will prepare what? Final accounts. Final accounts in case of sole proprietorship. If it is a company, these are called financial statements. These are called what? Financial statements. These are called, in case of companies, it is called financial statement. So these final accounts are financial statement. What these are includes? So these are nothing but preparation of trial balance, preparation of profit and loss account, preparation of balance sheet. So these three will be prepared in the summarizing process. So to prepare these financial statements or final accounts, so the ledger accounts are very, very essential. On the basis of ledger information, we will prepare trial balance as well as profit and loss accounts. Okay, my dear friends, I think it is clear. So yes, it is up to one thing, that is preparation of final accounts. After preparation of final accounts, it is the next level, which is very, very important. Okay, by seeing, after preparation of these financial statements, we can come across to figures, isn't it? By seeing figures, nobody cannot understand what is happened completely, isn't it? So for the purpose of understanding better, understanding in a better way, or understanding about the financial status of the business or the company, it is very important to short form, that is what, giving the short form of explanation to the figures in the financial statements. It is the process done in the next step, that is analyzing and interpreting the results. Analyzing and interpreting the results. So we can come across to the results in prepared financial statements. But if you want to understand clearly or in a better way, we should establish a relationship between the figures which are in the financial statements. Then only we can understand better, and we can the information can be useful to the internal users of the accounting, as well as accounting information, as well as external users of the accounting information. For the management, it is very essential for what happened, to know what happened, and why it is happened, and what we should take the decisions in the future. As well as by the outer parties, it is very important, either it is interesting to invest in the company or not, it is interesting to continue the business or not. If it is in case of government, yes, what is going into the company and what the taxes they are paying, everything can be known by the external parties. So my dear friends, accounting information is very important for the internal users of the accounting information, as well as external users. Okay, my dear friends. So finally, I am summarizing the definition here. Accounting is an art. So because we should do it is in a systematic manner, and it should be done in a chronological order. Okay, we should record only the transactions and events which can be identified as a financial transaction, which can be expressed in terms of money. Those should be recorded, and after recording, those recorded entries in journal should be posted in ledgers, that is classifying. After preparation of ledger accounts, we should summarize them by preparing financial statements, namely trial balance, profit and loss account, and balance sheet. After preparation of financial statements, we should give explanations in short forms of explanations, as well as we should establish some kind of relationship between the figures by using some other tools and techniques in accountancy. Okay, friends. So you can understand in detail what is these processes in the next classes. Until keep learning. Thank you for watching my class. Bye bye. If you like, please if you like this class, please like, comment and subscribe. Thank you all.